What's going on, everyone? My name is Jeff. So I've got a lot of requests to cover earnings report from this past week. I did try to make it a priority, but just too many other things were going on. Now I really have an opportunity to sit down, present this information, guys, and let's all get some good discussion going on down in the comment section. I know several of you mentioned you were going short before the earnings call. I actually wrote a set of calls up to the earnings report and sold 2 days before they reported. I was way too scared, did not have the courage to hold those through earnings, and I'm very, very glad I did. So let's kind of go through this a little bit at a time. I want to start by talking what the sell side analysts are saying, kind of make you guys aware of that on the front end. And so these comments come in by analysts shortly after this almost $40 per share drop on the stock price, guys. So let's get into it. Do me a favor, make sure to drop a thumbs up on this video. I appreciate all the support, and make sure to subscribe to the channel if you have not done so already. So right off the bat, Wedbush Dan Ives says Tesla's disappointing gross margins call into the question the company's ability to show sustainable profitability on the heels of lower margin Model 3 units going forward. This is nothing we don't already know. I think this is very, very typical from Tesla to approach an earnings report. There's a lot of smoke and mirrors. There's a lot of hype. Then, of course, when the numbers have to be reported, it's very, very disappointing, okay? Now, we did see a tick up in demand, and we did see a little bit of increase there, but Tesla did not show it in their numbers, and I will be getting to the earnings report really, really soon. And then this paragraph mentions that Citigroup gets right to the point by saying it observed more negatives than positive during Q2 auto gross margin that came in below expectations. The quarter will likely fuel the bear case around Tesla's ability to achieve sustainable profitability after their H2 2018 performance. So that's really what happens here, guys. I'm going to give you an example in a company like Align Technology and a company like Tesla, okay? Align Technology they reported earnings, seen a big drop in the stock price, but people are actually calling that a wonderful place to buy because they have been so consistent with earnings throughout the past 5 to 6 years that they were probably due a bad quarter and a big pullback, where Tesla has been wildly inconsistent. If you want to go back to last quarter and now this quarter, Tesla has been reporting terrible numbers, and we just have to see more out of this company than that, okay? RBC Capital says not a lot to like from Tesla's Q2 2019 print. Softer gross margins with an unclear path to see them higher, larger loss than expected, vague guidance, and CTO department. I like that word. I like what they just said there. Vaguer guidance, okay? I think everybody on Wall Street is doubting Elon Musk's capability of projecting earnings, okay? He has no idea what is going on and what investors are to expect. We all just know that he does not like short sellers. They just seem to bother him and get in his head quite a bit. Nomura calls Tesla's free cash flow a bright spot, but doubts there's enough investor confidence to get the stock working again. And then Bernstein isn't quite as negative. They calling Tesla's quarter not good, but not terrible either, okay? So that is 5 analysts coming out in one day and basically downgrading the stock and leaving negative comments. So, of course, you did not see any upgrades with Tesla stock. Let's go to the chart. I do want to talk about some of the price movement that we've seen recently. If you want to go back to the early parts of June, I published a few videos about Tesla when it was trading down under $180. I really try to suggest to cover out on any shorts, get out of any put options, because from that point I had no idea what was really going to happen with the stock, and it made a massive recovery over the past month and a half. And that it did, guys. It made a run into earnings. This is very common. And I even think you could probably position yourself to do this again with certain companies, like take advantage in the big dip in Netflix and also take advantage in the big dip in Tesla. I do not think this stock is done trading down just yet, but somewhere around a month to a month and a half, depending on market conditions, I think you could ride a set of call options into the earnings call, then sell right before they report. And who knows, you might even want to buy a put option or two, because those seem to make some outstanding money. Tesla traded all the way back up to $265 a share. I do think optimism was a little bit too high. I've been watching some videos here on YouTube and watching some of the coverage, and it was still all very, very negative on Tesla's earnings. And that, of course, we got another big drop. Over $40 a share fell off Tesla and has traded itself back down to the $220 level. Guys, I do think it's going to stay here for a while, but depending on how hard analysts beat it up, it might go down some more. I would not be surprised if it retested the $200 level. Would not surprise me a bit. Right now, Tesla is currently trading at $228. It took a small loss on a very, very green day today, and it even shot down to $227 in after hours. So like I said, I do not think Tesla is done trading itself back down. Then, of course, this is the results of the earnings report. Their quarter two non-GAAP EPS of a negative $1.12. That missed by 72 cents. They missed revenue by $90 million. And of course, they were supposed to come with $6.35 billion, and they missed by $90 million. So I think it's just perhaps the stock is starting to be fairly valued, but the analysis is just too negative, and Tesla is going to continue trading down for a period of time. That is my belief. Like I said, it could rebound here. Really just kind of depends on what analysts come in and say about how many sharp downgrades are they going to take. We just seen 4 or 5 of them. But these are all companies that already have ratings on Tesla already. So it's more of a reiteration instead of new analysis. Now, a couple things I do want to talk about, guys. I don't think you should really buy into some of these things that Elon Musk is saying. Highlighted on the company's earnings call that the company is close to self-funding, and reiterated that he expects a break-even quarter 3 and quarter 4 profitable. I don't really see that happening. I would not put any stock into that. I know there's a lot of people that are going to take that and try to run with it and think that comment right there is going to take them to further grounds, but I'm issuing fair warning here. Guys, I really do not see that happening. He basically has 3 to 6 months to make that happen, and it's just not looking like it's possible. This next thing I don't really consider a big amount of news, but in the news from C-Suite, CTO JB Straubel is transitioning into more of a non-operational role at Tesla, which he said on the call has nothing to do with a lack of confidence on the company. This is just one of those things, guys, I would not really pay a whole lot of attention to. CFO Zach Kirkhorn, we are all very familiar with him. I know that I am. He participated on the earnings call, noting that Tesla's story is hard to visualize on a quarter-to-quarter look. That is probably the most realistic statement that I've heard, and I think that's just a very prepped up way of saying continue to expect bad earnings from Tesla quarter after quarter. That's how you really got to play this company, guys. Ride those call options maybe a month to a month and a half before the earnings call, start mapping it out, and then a few days before Tesla reports, get out of those call options and let whatever is going to happen on the earnings report happen. As you can see, like I just mentioned a minute ago, the money was on the short side and the put option side once again. So I don't feel any need to be very, very long-winded with this video, guys. I'm going to keep it kind of short, try to get to the point. Is Tesla a buy here at $228 a share? Absolutely, if you are a long-term investor. If you're going to be playing the options market, I have a completely different strategy, okay? I would want to wait for the next earnings call to be posted. I want to be well aware of it, and then I would like to ride some call options into the next earnings call and sell shortly before they report. I do not think they're going to have good numbers in quarter 3. You know, some of the delivery estimates did come up quite a bit, but when you're seeing an earnings call that is this disappointing, even here, guys, going back to April on the quarter 1 call, their surprise was negative 322%, okay? They did have $4.54 billion of revenue. I'm just going to let Tesla stock kind of do what it does for the next couple of weeks. I think you're going to see it trade back down for a little while, and then I will probably chase it into the next earnings call, possibly. Really depends on market conditions. And of course, I do want to keep an ear out for when NIO reports earnings as well. So that's all I got for the video, guys. Make sure to go down in the comment section and share your thoughts with me. Thank you as always for watching, and have a great day.